So we got a higher high. What's up? What's up?
Yeah.
We got a higher low. I'll start this out anyways. Boom. This will make more sense. We got a higher high. And then we got a higher low. So again, the market's going to start from here, right? We're going to make a high. We make a high point in the market. We pull back and we create a low point in the market. We're then going to go up. We're going to break that high and we're going to create a new high. We know that's a new high once it starts pulling back. Okay, when it pulls back, we need to make sure that it doesn't take out the previous low. This is the definition of an uptrend, okay? From there, it keeps going up and it keeps going up in that pattern, okay? We consider the market to be in an uptrend as long as the low doesn't break the previous low. So if I was here, okay, and the market hit up high and created a higher high, but then the market went down and it went lower than the low, okay? That's an indication that we might have a reversal. We might, okay? Again, the market could just shoot up from here and continue to make that pattern into higher highs and higher highs. And we can expect that. But if we do break this previous low, the reason that we want to say that's switching is because then what we typically see is the market pull back. And then if we see a lower high created at that point, we know the market has switched, okay? So if we continue in this direction, then typically the market's going to do the exact opposite, right? We're going to create a low, okay? We're going to create a high, and then we're going to create what's known as a lower low, yeah?
Yeah.
A lower low, and then we're going to create a lower high. So again, the highest and lowest point the market has been to, it's the exact opposite from an uptrend, right? We're going to make a lower high over here, and then we're going to continue in that momentum, okay? Again, we go up, we create a high, we pull back. This is what's known as a pullback in the market. Because again, we can't just go up forever. That's what we know. The market can't just continue to go up forever. It's got to come back. It's got to kind of lose some of that. It uses up all its energy right here, and then it kind of needs to recoup. Just like a runner, right? You run a long pace, you run a quick sprint, and then you kind of just walk for a second. Yeah, you keep it chill. And then you do another burst, and then you walk for a second, and then you do another burst. Okay, that again, as long as you're creating higher highs and higher lows, we consider the market to be in an uptrend. With that being said, if we know the market's in an uptrend, we know we want to trade with the trend. So that means we're looking for buys. That's why it's important to first understand what direction are we seeing the market move in. Okay, if we notice, okay, it's starting to make a high, it made a low, it made a higher high, it made a higher low. Okay, now I can kind of determine, okay, I'm looking for buys. Now I just need to find an entry point. Okay, again, the opposite, we can no longer consider this an uptrend if we break and we make a low below the previous highest low point. Does that make sense? So again,
Yes.
we were making lower. The lowest the market has ever been was going up. Now the lowest it's ever been is going down. We're making a low. The high is going down. This was the highest point the market went. It made a low point right here, and it made a lower high. Yeah. And then we consider that all the way back to a lower low and a lower high, and we continue the market in that direction. Does that make sense?
Yeah.
Now, what we typically see, the third market phrase, okay, so I just did the uptrend and the downtrend. Our third market phase is going to be consolidation, and that's when the market creates a high and then a low, and we can even say it's above, right? And then what we're going to see happen is the market no longer makes new highs or new lows. It just kind of gets stuck at each high and each low and moves sideways. Okay, this is what we can call consolidation, or we can call a ranging market. Okay, this is when the market's going to move sideways. Does that make sense?
Yep.
Now, typically, when we see market movement, what we will see, and this is why consolidation is important, is when we get into our high, our low, and our higher high, and then we go down, what we can typically see is once we've used all this movement up, right? what we can typically see is the market start to move in consolidation so it can build up steam, okay? It'll start to move sideways and it won't make any higher highs. And then what we typically see after consolidation is we see a break. And this is what we like to get into, is this breakout. We hit that break and then we continue in this direction up and up and up, okay? That's what we're really looking for when we're looking to get into these Forex trades as far as my strategy goes. We're looking for an uptrend to be formed, okay? We want to see that uptrend. Then we want to see the market moving sideways, okay? At that point, we can trap the market in a little box and say, when the market breaks out of this box, there's a high likelihood that it's going to continue to the upside. And you can get in on that on the break, okay? Does that make sense?
Yeah, so you're saying basically when in consolidation, is that when like you can indicate that it's about to change?
Yes, that's exactly what that means. Yeah, when it's in consolidation, you know something's about to happen, and it's going to happen usually in a major way. It's going to move really far up or it's going to move really far down. Again, I'm giving you textbook information. So textbook wise, this is typically what we like to see the market do. If it came from an uptrend, we want to see it continue in an uptrend. Now, with that being said, again, the market can do whatever it wants to do, and the market can break to the downside and break out of this. And at that point, if we've noticed, again, right, we created a lower, we just talked about this, a lower low. At that point, if we see structure form like this and it makes a lower high, then we can also take the sell, okay? We can also go in this direction and assume if it breaks out the bottom, then there's a good chance that it is going to reverse at this point and go down. Now, I personally like to trade with the trend because what can happen is there can be fake outs. So what they can do is they can fake people out in the market and kind of make you think it's about to go down. But then what happens is it just goes up from there and then breaks out of that consolidation and does exactly what we think, okay? So again, what I prefer to do, and again, that could go for the top side too. It could look like it's a breakout, and then the market can actually go downwards, okay? This is very possible. Again, I told you yesterday, it's impossible to know really where the market's gonna go exactly. All we can do is textbook and know probability-wise, this has the highest likelihood out of consolidation that we will continue in the trend that we just came from, which in this case was an uptrend. Does that make sense?
Yep.
All right. How are we doing so far?
Perfect.
Okay, cool. Next thing I want to talk about, those are trend phases, okay? Again, I wanted to talk about, just going over briefly, we got our uptrend, we got our downtrend, we have consolidation. Typically what we like to see out of consolidation is trend continuation. Again, we usually, my style of trading, I like to trade with the trend. It tends to have bigger movements and it tends to be a little more consistent. Now there is called reversal or reverse trend trading, which, because again, there is a point where the market can't go up forever, okay? So then a lot of people like to try to catch these reversals and sell the market, and then it'll go back down this way, yeah? So again, the market has to, if it goes up, it has to come down. And when it goes up, it has to come down. So eventually this is gonna happen. So there are people that trade reversals, but more people suggest to trade with the trend just because it's a lot easier, especially with a newer trader. There's a lot more that goes into reversal trend trading. Does that make sense so far?
Yeah, so is that like the only two, or is it more?
Those are really the only two, because again, the market can go up or the market can go down. There's only two things the market can do, right? Again, when it's going sideways, we can't make money if the market is just at the same price every single time, right? So we're predicting that its price is going to be up or price is going to be down. So again, that's all that has to do with. And then next, what I want to get into is now, what is it that the market hits when it hits up and then makes that reversal, right? We talked about that pullback or that reversal. What is that? That's actually a term in the market that we like to call support and resistance. So when you come up, what we'll see is the market hit a type of ceiling. That's what we'll like to call it. It's this ceiling that the market will tend to hit, and we can look out for these ceilings. When it hits that, that's what we call resistance, okay? Resistance or a ceiling. And then we'll have what's called that pullback or that reversal, right? And then what will happen is we'll see what looks like the market is hitting a floor, okay? The floor is called support, okay? So again, we have resistance and support. What we'll see is we'll see just like a bouncy ball, when it hits the floor, it goes back up, okay? And then we'll see this is exactly what happens in consolidation. We hit that resistance, that ceiling, then we hit that floor, that support, and then we continue in this manner, okay? So when we say the market is trapped, what we can say is there is an area right here that the market is going again. Again, what this can look like, I'm looking at perfect, right? But what can happen, we always say it's an area because it could be something like this, right? It might not be so perfect, but we can see this area, the market is not wanting to go above, okay? So again, this area, what we call this is resistance, okay? And we like to mark this red because we like to say that it goes down from there. We have a little, you know, resistance at the top. It's a stopping sign, basically. And then at the bottom, we have this area. Again, I'm teaching you an area. It's not a particular line. We use lines, but that's just give us entry price. This area, as long as the market is somewhat in this area, right, we can see, okay, this area in the market, there seems to be a floor, right? The market doesn't want to break that floor. At that point, we can kind of make that green, and we can kind of call bounces, and we call this support, okay? This is basic terminology. This is just basics. Support and resistance. Does that make sense? So that's what's going to be in consolidation. With HFX style trading, this is what we trade actually. We like it. We wait for it to come up to this resistance and we take the sell. Boom. And then when it comes down to the support, we take the buy. And then we continue in this manner on HFX. It's quick, it's small, these are tight moves. Yeah, these tend to be tight moves, especially on smaller time frames, they're tight moves. But this is going to happen a lot, okay? Now, the tricky part is we never know how long this is going to happen, right? So you might see the market doing this, and then you're going, okay, I'm going to take the sell right here, and it just might go through because what do we know? Trend continuation, right? Or at some point, the market's going to want to make a move out of this location, and we're going to break this. We're eventually going to break the ceiling, and we're going to continue in the upward direction, or we're going to break the floor, and we're going to continue in the downward direction. Does that make sense?
Yeah.
Yeah.
So if I'm marking a chart, does that mean like never use just one line instead of the area?
So I'll teach you how to mark up your charts. We'll definitely go through how to mark up your charts. But usually when I draw a line, so if I draw a line at this point, right, I can say this is the highest the market has ever been, is this line right here. If I look back at price, yeah, I can see that's the highest the market's ever been, right? I can say, okay, if the market goes above that point at this line right here, it gives me a little price over here. 89.248. At that point, if the market finally breaks and closes above here, that's a good indication that the market's going to continue to the upside. So that's what I can use my line for. But I have to understand that this is an area, okay? Because you can see that didn't hit the line. This was just at the bottom of the area, right? It might have just tapped the area. This is just in the middle of it. This was at the top of it. You don't know where it's going to be, right? But that's why we make an area so that we can kind of determine you can still see within this area, there's sellers there. There's people coming into the market and they're pushing this thing down. And you can sign us all. I kind of call it traffic too. It just looks like there's a bunch of action happening right here. Yeah, a bunch of things are happening right in this zone. Same with the bottom. Right in that zone, a bunch of things are happening. Does that make sense?
Yes.
Okay. Now our next concept is going to go in with our last concept also, and that's going to be break and retest. Okay. Now what we can know about resistance and supports, like we just said, is eventually they're going to get broken. That's one thing that's a fact about. Okay. Now what we like to see, again, going back textbook scenario, what tends to happen in the market is once we break resistance and we come above resistance, what we can typically say is that resistance will turn into support. Because remember, we said the market has to continue up in that uptrend more times than not, right? So at that point, what we can typically see after a break is we can see what's called a break and retest, okay?